Well, welcome everybody. This is Leslie Jufus with Trading Live Online, and welcome to the weekly market setups for this is for August 24th, 2023. This is the last official weekly market setups. This subscription is ending from my website. However, I will be doing some updates on my YouTube channel. So there's a link in the text of this video email sent. So please make sure to sign up for my YouTube channel and subscribe, and you'll be notified of any updates that I do. So let's get started today and take a look at the Fear and Greed Index. We're going to look at the VIX and, of course, the major market indexes, S&P 500, NASDAQ, Dow Jones Industrials. And we're going to take a look at the energy market today too, as I think it's a time that you can go in another week or two and fill up your gas tanks at a lower price. We're going to look at gold as well. I've been tracking this, and it's just kind of been flopping around a little bit, but we're going to take another look at this, and we're going to look at the symbol coin. And we're going to look at the SOX index charts. And we're also going to come and look at some of the big five in the big tech industry. And these are ones that go back a couple of years that I have followed on various videos for different segments. I've put them on the stock charts or daily five. But now I'm seeing some interesting things on those. So I think we should take a look at some of these big names today as well. All right, let's get started with the Fear and Greed Index. You can see it's now at a neutral reading. Just a month ago, it was at the extreme, in the extreme greed, and now we are at neutral. So it's rotated all the way back to this level. Now, I think we're probably going to see a bit more sell-off. We are in a seasonal window for a downward bias in the market. So as we scroll through and we look at the indicators that they use, we can see that where the greed is, it really hit a high up here back in late July. But it also has more room to come down. So we want to keep an eye on the market momentum and the stock price, because I don't think we're going to see a real low until we see these really oscillate down to some meaningful lows. The stock price breadth using the McClellan Volume Summation Index is correcting to the downside. Put and calls, you've heard me say probably before, when the puts are high, it's time to buy. When the puts are low, it's time to go. But it's a difficult thing to assess on this index exactly where high is and where low is. You can see back here there was a low, a high here, a low a little bit lower, lower high. So there's not really a good timing tool, but we do want to take a look at it when we see the puts come up, above this 1.0 level, closer to where these peaks were, then that might be giving us an indication that the market might be getting ready to turn back to the upside. So, and the market volatility, the VIX, we're going to take a look at that right now in a different chart. So the VIX, we can see on this daily chart, I'm on stock charts with this, and you can see where these recent lows have been, and the VIX tends to make ranges. And so right now the range that it's in are these lows around this 12 area, and right now the highs around this 18 was the last high there, just below 19. Now, generally, when you see a really good low in the market, generally the VIX will do some type of a spike move. And so if we go and we look back to the beginning of this year, or the early part of the year, you can see back here in March, you see how the VIX did a spike up here to this 30 level. And remember, this is the inverse index. And so when the VIX is moving down, the market is moving up, and vice versa. When the VIX is moving up, market is moving down. So here is back here in July is where the VIX started moving to the upside. But to me, this still looks like a range. And I think, again, to have a good bottom, and I think we're going to have to see the VIX spike above this 18 level, likely back up into the 20s, maybe even approaching the 30 level. So we'll keep an eye on that. Now, if it just continues to the downside, the market's going to be moving to the upside, and we want to watch these lows on the VIX. If the VIX is able to exceed that, then that's probably going to indicate that it's a sustainable move to the upside. So we'll be keeping an eye on here. But right now, I think it's just really in a range. If you look at the horizontal cursor, about there to about here on the lows. So looking at the using the SPY chart on a monthly time frame, so we can get a little bit broader perspective. Now the market still has a few more days in August, so this monthly bar has not closed yet, so we're not quite sure where that's going to end up. But I think this open right here, notice how this open was about the same as this close, and right now the low of this monthly bar, again, depending on where it ends up this month, is pretty close to around that area. And so I think that's going to be a price level that we want to keep an eye on, and I suspect that what we'll see on some of the smaller time frames is probably a large range forming. And I think that might be the case right now, but we'll take a look at some S&P 500 futures charts on smaller time frames, and let's see what we can find for the support and resistance levels there. On the monthly chart on the SPY, of course, this is the resistance area, this high up here. That's one that the market needs to break to the upside to continue this move to the upside. Now, on the downside, right here, the low that was made, that's almost the 50% mark of this long candle in the Japanese candlestick theory. That 50% generally can be a very good support or resistance area. Here's an example as resistance from this long bar to the downside. And then there was a rally to the upside here, just about to that 50% level, found the resistance. So this is already tested there. The level that I think is just really going to be the key level, this is going to translate to the 4,200 level in the futures. We can see right here on the SPY chart, which is just above the 400 level, 415 to 420-ish. But this is the level that the market spent a lot of time testing and finally broke through earlier this year. And these lows are going to be important on this candle as well. I've drawn a trend line in from the lows of 2020, where we had a very fast bear market, and then the market resumed bull trend to the upside. Then we had a down move there. So I've drawn this trend line through here, and it's intersecting right here with this level. So that's also just going to be a very important price point to watch if the market comes down to this level to test it. You really want to keep an eye on how price reacts at that level. Now we're looking at a weekly chart of the S&P 500 futures. So this gives us a little bit more detail than what we were looking at on the monthly chart on the SPY. So there was a big A, B, C, D sell. Up here on some of the other charts I've shown previously, you might have noticed there was a big resistance area between the 786 and the 886. And that's where the market kind of stretched up to and now has come to, the downside. Let's see if there's a retracement yet, even on the C to D leg. There's not one yet on the A to D, I know that, but just about at the 0.382 here. So the next level is going to be right about that 4,200 level right here, the 0.50. is, and you can see I've got a dashed line here as a support, and also right across this level here as well. That's just about the 4,300 level. I'll, on this decline, we might see another move to the upside, and then maybe another leg down. We might see a nice ABCD buy pattern form. So we'll keep an eye on this chart. Now, as far as what some of the indicators that I have on here are showing us, you can see here that the MACD just turned to the downside about a week ago. And this is this week's bar for this week's trading. So this level right here, the 4480-ish level, so just below 4500, is resistance. And of course this high up here just above the 4600 level is resistance as well. There is a gap level. I want to point this out. We're going to look at another time frame. Hang on just a sec, but I'm going to go there in just a second. Let me finish up on this chart first. So those are the resistance areas. So, you know, a rally back up to here can be a good shorting opportunity. That was the case this last week, and I said on this video that I'll be watching for, you know, a rally to the upside as a shorting opportunity, and we got that. There were some nice patterns that formed with that. Now these lows are the lows to be keeping an eye on. And the low is, I think, 43.50, the low of this bar right here. So that's currently the support level, shorter term, to be watching. So let's scale down to another time frame. So this is actually intraday chart of 240-minute chart. So here's a support level to be keeping an eye on, that 43.50 level right here. Here's the gap level right below that. So this we can see on the intraday chart. We can't see it well on the daily chart, but we can see it on this intraday 240-minute. You should be able to see it on a 60-minute, 120-minute, etc. But so that's right at 4,300. So the trick with this is that if the price breaks this, it's breaking this support level. So we want to be watching how price reacts at that gap. In other words, is it able to, let me draw another line, is it able to come down, test this gap right here, and then rally back up? Get a good rally back up, maybe above, you know, this resistance level, or does it just hover around it and then break? That would be bearish, and then we'd be looking down around that 4,200 level. Okay, so that's what I'm going to be watching this next week. So this is where the gap is. So the high of that gap is 43.69.50 on the bar I'm using. No, wait, that's not right. Let me check again. I had the wrong bar. Excuse me, 43.0250. Okay, so that's right there. And the low of this bar, where the gap begins, is 43.38 1/4. So that's where the gap area is. I'll draw my yellow gap circle. I always use a yellow circle for it. And so we want to be watching that area. Now, if it comes down here and is getting support, maybe we have a small pattern, then that might offer a buy opportunity. These are short-term buy opportunity. I think everything is really short-term right now until we see a better low made of what I described earlier, and same with the shorting opportunities. I think everything is pretty much a little bit more on the short-term basis right now. But we could be forming also a big range, because look at this, we've had these big swings, swing up, swing down, swing up, swing down, swing up, swing down. So if this level is not broken, but the market continues to just swing up and down, then we might get a really nice range that we can draw some trend lines on. And even if it comes down farther, then maybe we're still creating a big range in here. But here's the 4,200 level. Oh, let's draw another line. That's what I need, is more lines on my charts. So that 4,200 level, that's a key level as well. And that's just, there's a gap here, another gap here to be aware of. right around where that breakout was of 4,200. Okay. One more note, we looked at the VIX. So if this starts breaking some of these important support areas, we want to be watching the VIX to see if that is now starting to spike to the upside to those levels that I pointed out. Hey, let's take a look at the NASDAQ now. So here's the extended butterfly pattern that completed in July. It took a little bit for this to get a completion where it turned from the 127, 1618, just kept going up, but it was the 2.0 level at the 886 where the NASDAQ turned from. So from there, we've had a couple of retracement patterns. There's a Gartley sell right here, strong leg to the downside. Now notice where it has stopped. It has stopped at this gap level. So this lower line right here is the start of that gap level. So this is going to be important level for the NASDAQ to keep an eye on. So right here, the NASDAQ had this rally back up and then a strong move to the downside. And again, the high of this bar is right around the 0.50. This should be pretty good resistance on the NASDAQ. And you've got to watch this support area on the NASDAQ as well. So I'm not expecting any, to see any new highs yet on any of the indexes. Just not quite seeing that yet. Again, we need to see a really good buy point, I think, for even an attempt to get through those levels. But I think we're going to see some testing back and forth. So we want to map out where the important areas are. But still bearish indications on the NASDAQ. It had a spectacular trend to the upside. So again, the question here is, are we going to be going into a big range? Or we break these support levels and maybe get down to one of these retracement levels from the lows from October a year ago, maybe down to the 382.50. So I think this is the low to watch right now. Watch to see if this gap level right here holds or not. If it breaks, then be looking for lower levels on the NASDAQ. So we're going to take a look again at some of these big names in the NASDAQ. So the Dow Jones, I'm using the YM contract. That's for the Dow Jones E-mini futures, and it's on a regular bar chart. I will just click it on to a candle chart, so you can, if you want to take a look, see how that looks. There we go. Look at the difference. Look how quiet it is with the bar chart. Every once in a while, just put these regular old-fashioned bars on there. And take a look and see what it looks like. I think sometimes it quiets the drama of candlesticks. Okay, so we'll put it back there for now. But notice how this retracement, so now notice how the Dow, so we looked at those breakout levels of the NASDAQ to the upside, the S&P to the upside, and notice how the Dow has gotten back down to where it had the breakout level here. Look at all the time that it spent trying to get through that level. It got through it, but only to the 886 retracement. And now it's having this move to the downside. So for the Dow, this 0.50 level, I think, is the next level to watch on the downside. Here's again some resistance where that breakout level was, but lots of resistance right here as well. So again, I think a little bit of short-term trading both directions, but I think the downside, you've got to be a little more cautious and use some confirmation for any trades. And be looking for short opportunities into resistance levels. I thought the SOX index was interesting when I took a look at it. So here we have a little bit more history here. So we can see where the SOX index semiconductors broke to the downside, a lot of retests there. Down we go, then inverse head and shoulder and back up. Now, a lot of those semiconductor stocks were very, very strong. However, now I think it's a little bit different story and they have some more correction to do. So there was a butterfly sell pattern. I think I had that in here a couple of videos ago. and now move to the downside. Now, notice something here for those of you that know and use this pattern or are studying this pattern. Notice how we don't always get just a turn to the downside. Sometimes you don't get anything and the price keeps going. But in this case, there was a gap to the downside. Market came back up to that gap, just retested this high, was not able to go further, and then started the real downside. So you've got to understand that with any pattern that you use in technical analysis, there's just different things that the market can do, that the price will do. So got to, follow the price action. So if we look at this high right here and we look across to the left, we can see that that was retesting this huge cluster of price activity. If I extend that line across from the center, extend that across, we can see that's where that resistance is, which coincided with the 886 retracement. So this is a super important high for the SOX index. If it exceeds this high, then my interpretation and my feeling is that it's going to be a strong move to the upside. But for now, I think it's looking more bearish than bullish. And this to me looks like it's a complex head and shoulder pattern. Complex meaning sometimes you have more than one head, sometimes you have more than one shoulder. But I think we can draw a trend line down here. Whoops, not there. Just a minute. Let me move it. Here we go, right there. And I think a break, a closing below here is going to be negative, and this may give us a measured target on these stocks. So let me just put that in. Let me clone the line, drop it down. Okay, so that would bring it back down to earlier this year, where the market came out of an inverse head and shoulder pattern, came to the upside, some more testing down. See this triangle type pattern right here, and that's where the market took off to the upside. So this may end up being a good support area if the price gets there. We never know what price will do. We can just, map out our patterns and our levels and then monitor the price action. So for the SOX index, this is what I'm seeing. And we'll take a look at a couple of these big name stocks. Okay, so this is the energy ETF XLE on the daily chart. So this has been, look at all these big, huge swings, down, up, down, up, down, up, down, up. And actually this is in a, a really big range. We can see that right here. But it's made this ABCD sell pattern here. So the market came up, it's come down a little bit. It formed a ABCD buy pattern. So this low right here is going to be the low to watch. If the price comes through here, we'll probably see more retracement to the downside. Let's draw our little line across there. And you should be seeing your gas prices come down. So don't fill up yet. You run on fumes for a little bit, see if this breaks. Then from there, we can, because there's a lot of, again, you're hearing in the news all of the time, the same thing over and over. Remember when eggs were in the news everywhere? And then, you can make an assumption that you're close to the high of a market, and then you go and technically go find confirmation of that on the charts. So here the confirmation is going to be that we see a break below this low right here. Let's look at the futures of crude oil. So here a range that has been forming for a long time. So here on this run to the upside, this is where our, we see our gas prices go up, 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 up. And here, again, same thing as what we just looked at on XLE. Got a bit of a gap to the downside. Market is just testing that gap. Below here, I think we'll see a good retracement to the downside, probably towards this center line, and you should see some lower gas prices coming. Okay, here's the ABCD of gold. It completed this last week and has bounced to the upside. So the support level right here, right here. There's always yeah, it depends on, how what price does from here. If it continues to move up and then down, that would really be breaking support. However, if just from here it starts to come down to these levels, then it may find more support here. And I would be looking for bullish divergences to help with confirmation with that. But right now, this pattern is complete. It's retraced back to about halfway of this candle. If it does a little bit more retracement, that might offer an entry. And I think stops no more than below the lows here, and then wait and see if it breaks that low. Um, what the price action looks like from there. But I think gold, may have some more room here to the upside to go. Right now, it's at a retracement from the C to D leg. So it always alters the risk reward on a trade. So as an example, let's say a trader is trading this ABCD pattern and they're in right when the pattern completes, and then it gets the retracement. Well, they may be done with the trade here, but to get in here, you're getting in. You have to have some confirmation that you really feel this is going to continue to the upside in order to take an entry around this level and use that as a low. So I hope that makes sense. Otherwise, you just have to wait for a better signal, whether it's if it gets more of a pullback to here. We don't know if it will, or it might even come lower with a divergence. So it's a little bit, you know, yeah, it's a give or take for sure on this, but always, always take a look at what your risk reward is. All right, so after coin had this big run up from the lows down here with some buy patterns happening, it had this big run, and then when it started to come back into the areas that you'd be looking at for support, possibly a buying opportunity, you notice how it just kept sliding down. So it gets to the halfway point of the candle, just a teeny little move to the upside, and then turns around with this bar. It just gets a teeny move from the 382, teeny move from the 0.50, and now the 618 retracement from the low to high is just holding that. It doesn't look extremely bullish to me at this point. Of course, back here when it was taking off, it looked very bullish. Generally, when you get big bars like this, generally finding a buy into a bar like this can be a good trading opportunity, but it's never 100%. So we use the stops. So now I think it's just sort of a wait and see on this for another pattern to form. On it, the RSI has come all the way back down to the low end of the range. So I don't see it as extremely bullish right now. Bearish, it's in a big range. So we can see that right here. So very, very bearish. It would have to break this range too. So maybe again, this is just going to be forming a bigger range within the big range. So we'll keep an eye on it because when it does move, it does move in, pretty good size moves to the upside and also to the downside, but we'll keep an eye on this. And if I do some updates on this, it'll probably be on the YouTube channel. So don't forget to subscribe on that YouTube link. All right, let's take a look at Apple. This is really, I think, a interesting chart. So lots of patterns in here, and notice how this trend line from the high back here across this high, this has just been extended out in time. And so here's where Apple had this there's a big buy pattern down here, and Apple took off to the upside. Have that in one of the daily fives way back here, saying Apple was looking bullish to me. And up it goes, and we never know how far it's going to go. Notice how right around when it was on under this lower trend line, it just spent some time just kind of consolidating then went through it and then found support there and then continued up to the upper end of that. Well, that's at the end of this move right now, obviously. You can see the gap to the downside, and now it's just sort of trying to hover onto this trend line. I think breaking below these lows is going to be negative for Apple. It's not in a bullish mode right now. But I would be waiting if it does break this and possibly wait for a good buy pattern to form. And so when we were looking at the overall picture, earlier, and I said, I just don't think the downside is done yet. And looking at charts like these on a big name like this, that kind of gives me sort of our weight of the evidence to that opinion. So let's take a look at a couple of other big names. Well, Microsoft, again, a spectacular run to the upside, getting above these previous highs, now below those previous highs. There was like an A, B, C, D extension up here, kind of a butterfly extension. This little low here was just a little bit below there. So usually you've got an X, A, B, C, and D. So generally the rule of thumb is that you don't want to see the C point below the A point. And it's just a little bit below it, but look at the pattern. That just looks butterfly to me. So sometimes use some common sense with the patterns. So especially since this long bar to the upside, notice how it took that out as support, didn't hold as support, tried to get back up there, then a little gap to the downside. So it looks to me, again, like Microsoft, same as Apple, that's it for the upside for now. This may form, if it gets another rally up, Microsoft may form a Gartley sell pattern. That would be A. We have to see what happens. I don't know if that's going to happen, but we'll just put that in. If this comes down now and makes a low below here, that will negate this pattern. But if this comes up in a similar fashion as the AB leg up to, here's the little gap area, so it could be 1.0, 127, the 1618 would be retesting this high area. But I think we'll see a deeper retracement here in Microsoft. Here was a good breakout area. See where this gap level is? Let's see, get my yellow gap circle, the official gap circle, yellow. But here, that's right around the 0.50 and 0.618. So it would be retesting back into a breakout level. And that area may offer a good buying opportunity. So let's take a look at another big name. Okay, so this is Google. And again, similar, run to the upside, not as strong as Microsoft and Apple. Because notice here the previous highs, and Google did not get that far to the upside as what we just looked at. So right now, here's a bit of an ABCD. There's a bit of a gap in that ABCD. So sometimes that can be a warning sign. But I think that there's also a range here to watch. And that would be these lows. I'll draw it in. I'm going to use this high right here, come across for the low end. And here's the high end right here. So we have this range in Google. So below here, negative. Here's the gap here, but I think it might do a bit more. And then up here, if it breaks to the upside, maybe up towards the 886. But again, this is still looking more bearish right now to me than it is bullish. But we have this range to help identify direction. Okay, NVDA. So this was like a leader in the semiconductors to the upside. Here's just some of the patterns. So inverse head and shoulder and this very strong uptrend. Look at how that gap just gapped above the previous highs from 2021. That's a lot of strength into here. But now I think it's ready for a rest. There's nothing yet that says that the uptrend is completely over on here, but I think it may get some back and forth, and hopefully maybe offer a nice buy pattern in here. This gap level is going to be an important level because look at where that high is. It's right around these highs from 2021, and the low of this gap is important. So this whole area right here is a very important support for NVIDIA. So let's take a fib retracement. Let's see. Sometimes there's different levels you can take that retracement from, and I see three levels. So one is the very low right here. So put that on. See if we can find any confluence. There's one. The other one, not sure that's quite all the way at the low. Well, you guys can kind of do it on your chart and make sure you get the low. I won't take the time here to keep trying, but here's the next low that you could try. So those are not too far apart from each other. But another one that you can try is right here. You see where this breakout is? Sometimes when you have a strong breakout like that, you can actually use that that breakout level right here. Oh, it's just going to drive me crazy. Okay, I'm trying to get right here. I think I'll see if I can get the lows of those bars. There we go. That one right there. A lot of times that's where the strength comes in. So a lot of times using a retracement from a very clear level like that can be a benefit. So here what I see, well, I see a whole bunch of 382s. So, throw a dart at which one you think it might be. But what I see here is a clustering of the 0.50 and 0.618 right down at that gap level, and same with this 0.50 here. So if this does end up coming to the downside, breaking these lows, I would be looking down into this area for a potential buy opportunity. Now, we don't know if that's going to happen, but we can map out our levels and hopefully find something that helps us to navigate a buy or a sell. For right now, I think that any retracement to the upside could be a short sell as well, about halfway to this candle, and stops above the high of that level. Okay, so that is it for the last official weekly market setups from Trading Live Online for my website subscriber base. And again, please sign up for the YouTube channel, and I'll be doing probably not as extensive videos as this is and the other ones I posted the last couple of weeks, but I will be doing updates on like one of the individual indexes or maybe an individual stock, shorter videos for you so we can keep our finger on the pulse of the market. Well, thanks for joining me. I appreciate all the support I get from you guys. Have a great weekend, and I'll see you on YouTube. You can also look up YouTube, just look for Trading Live Online. Bye, you guys.